Hello, hello, hello. Welcome to our stock trades. Now, in this video, we're going to go ahead and talk about a couple of features that we have that a lot of members that you may not know about. We're going to go ahead and explain a couple of important factors. Tomorrow will be our monthly meeting. We're going to have it on our private stock group, and I wanted to introduce this concept for you guys to help. So, without further ado, let's go ahead and share with us this beautiful screen here, and let's go about our business here. So the first command, you'll be able to find it under the menu stock financial scores when you look at stock fundamental analysis. And the command you use will be /F scores. Now, let me first off preface of what is going to be inside this particular analysis. Now, we have a data centers literally on Wall Street, right? Literally in New York, we have data centers that pretty much get in this data and mathematically processes it and distributes it to our members. This is our own proprietary technology, and I'm really excited to be able to share with you this. So what we have here is called the Altman score. Now, this gentleman here was a professor in New York, and he created this Altman Z-score back in the 1960s, I believe 1968 to be specific. And what you can see here is this scoring system, it takes in financial key metrics and data, which normally would take you 15, 20, 30 minutes, maybe 40 minutes to calculate, and it gives it to you immediately. And the scoring system goes from 0 to 4. Itemization numbers under 1.8 is significant for bankruptcy. That bankruptcy is a serious risk. Gray zone here between 1.8 to 3 is like, hey, we might, there is a possible risk of bankruptcy. Keep an eye on it. And anything above 3, definitely you're in the safe zone. Another scoring system is called the Petrosky score. Now, this guy is a prominent professor at Stanford, and he utilized and created this 9-point system. Now, to all my medical colleagues, think of the CHADVAS system that you guys use, right? To measure when it's appropriate to anticoagulate someone if they have atrial fibrillation. Now, when you go and look at the Petrosky score, anything under 3 or next to it is weak, and anything above 7 is strong. Now, what goes into the scoring system that you may realize this is complex? I think this will take you about 30 minutes to 50 minutes as well. So obviously the net income goes in there, return on assets, net operating cash flows, cash flow from operations, long-term debt versus to the prior year, current ratio versus the prior year, no new shares issued during that year versus the prior year as well, and gross margins versus the prior year as well, and asset turnover ratio versus the prior year. So I wanted to go and educate you guys on these specific things because, this requires a lot of information. So there's so many educational factors. We're going to be talking about the Mastering Stock Market course, but I wanted to go ahead and preface this really quickly for our Al Stock Alerts members, which is our monthly subscription. Now, let's go ahead and take a look at the Apple stock because everyone knows Apple. Apple is one of those companies, right? So the first things first is you have an Altman Z-score of 6.64. Now, if you don't recall, an Altman score greater than 3 is considered safe. Apple has an Altman score of 6.6. Apple also has a Petrosky score of 8. Okay. And we talked about anything above 7 is strong. Now, also, we have access to working capital, so you can see what kind of working capital do they have. And this is definitely something you want to pay attention to. You can look at retained earnings. You can look at EBIT, not EBITDA, right? And then you can stack assets over liabilities. And usually you want assets greater than liabilities. Now we have Tesla. Same concept. We're going to go ahead and take a look at it. Tesla has an Altman Z-score of 11. We said anything, let's go back, above 3 is safe. Likewise, Tesla has a Petrosky score of 7. Working capital 1.13. Total assets over liabilities is amazing. They have more assets than they have liabilities. Okay. Now let's go ahead and look at AMC, right? AMC has an Altman score of negative 0.6, sorry, negative 0.76. Okay. And we said we're here, it's weak. Sorry. Here, it's weak for the Z score, and we're in the negative territory for the Altman score. That means there's a high probability AMC could go bankrupt, which is why then the next question is, how are they going to fix this? Debt raising or diluting shareholders, aka APE. So you can see how fundamentals work. Regardless, people say, oh, it's not a fundamentals play. I beg to differ. They also have a Petrosky score of 4. Now you go down here to Petrosky score and you can see it's right here. Okay. It's near weak. And over time, if they don't continue to raise money, they will get weaker and weaker and weaker. Likewise, if you look at assets, they have 9.2 times 10 to the 9th power, and liabilities 1.17. Oh, that's not bad. Times 10 to the 10th power. They have more liabilities than, assets. Literally 1 to the 9th power, and this is 1 to the 10th power, an extra 0. So definitely scary. The next thing I want to talk about is company ratings. And the command to use this is /rating. And there's historic ratings too. Now, what is ratings? Well, beautifully put, if we look at Apple stock here, this is a scoring system which looks at the DCF score, the return on equity score, the return on asset score, the DE score, and the PE score, and the PE recommendation score, and the PB score, and the PB recommendation score. And it utilizes complex models and a lot of mathematical sequences and turns the information that the financial company brings you into something easy to digest, which you can sort through so many stocks and literally look at this. So this rating is super. They have a rating score 5. They have a strong buy in general for the rating recommendation. DCF score is a strong buy, neutral, strong buy. It's great. It's Apple. Okay. Now let's look at Tesla. Tesla, A+. Again, super is higher, right? We got a strong buy. We got a neutral on the return on equity, neutral on the return on assets, but overall strong buy, right? We got a buy here, and you could see the recommendations. Again, now let's go ahead and take a look at AMC. AMC is a B-. The rating score is 3. It's neutral. Which the reason why this is good is it allows you to pick up any red flags, right? And it's very, very fascinating, useful tool, because there's just, you go through as a trader or swing trader, long-term investor, you got so many stocks seeking your attention, and it's up to you to basically minimize that. And these are the tools that will help you minimize these things. So overall, we have a DCF score of 5 saying, hey, might be undervalued, but also you have a return on equity of 3, return on assets of 3. And then you have a DE score of 1, strong sell, a PE score of 1, strong sell, and a PB score here of 2, which is sell. Okay. So overall, these are very useful tools, and you have unlimited access to these tools for our Stock Alerts members and lifetime access for our Mastering Stock Market students. There'll be a link down below if you're interested, but I wanted to preface this video here just to slow it down and explain these particular commands. And guess what? We have over hundreds of thousands of commands. And you know what's interesting? What I just showed you are just 2 commands. Just 2 commands. Can you believe that? Anywho, if you like this video, please consider subscribing, liking, commenting, sharing. And tomorrow's our monthly meeting to our private stock group, and I can't wait to see you guys. I'll see you on the next one.